that is poised to jump up in share price. It is a uranium company. Uranium, of course, needed for nuclear energy, nuclear reactors, which are needed for AI, the biggest build out of the decade. And recent market volatility on Friday, we gave back all of September, and then now we're gapping up as of the time of recording this video, giving half of that, gaining half of that back. So now we're like to mid-September levels again. So things are, flip-flopping quickly with the whole China-US tensions. And right in the center of that is rare earths. And as a consequence of that rare earth uncertainty, there's also uranium euphoria, because that uranium can be used to power nuclear, which can create energy independence. And it's not 100% clear as to what I mean, because you need rare earths for the magnets that are in reactors as well. But at the same time, it helps these companies that mine uranium and refine it in the U.S. Because as China ratchets up its sort of regulation of exports to the U.S. of critical rare earth materials, the U.S. companies become more and more valuable in terms of potential to create that independence, and nuclear is happening, whether or not we're ready for it. So the AI overlords, the big tech leaders want it to happen. So government's given the green light with the Stargate $500 billion project for permitting, and UEC, Uranium Energy Corp, is a ticker that is poised to break out. So not financial advice. Let's jump into why this is the one for tomorrow and this week, I believe.
This is Sam Putnam.
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 So here's a little bit about the company, UEC, like a mid single digits $billion company, which puts it in the same category as like the USAR Rare Earths company, the sort of maybe Navitas Semiconductor. It's sort of in that large cap but unknown category. And they're expected to ship in late this year their uranium. And of course, nuclear generation being doubled by 2050 is a long-term goal. But as data centers get ramped up, it's certainly seeming like there's way more euphoria about uranium than 2050. I mean, this went from 6 to 12 in just a few months. So here's the move right now. You might say, okay, well, it just failed this breakout. What's the big deal? It's like, well, it didn't really fail. It actually had a really positive green day on Friday on a day that the market went down 4%. I mean, the worst day in the market since April lows. These days were absolutely insane. Even this day. So this day was like 4%, right? And this day was more than that. But that's pretty equivalent. Like this day is pretty equivalent to this day up here. Maybe this is slightly bigger. It's hard to measure exactly because it's different stock prices. But if I could see my percentage drawer, I would tell you exactly what it was. Pretty close. So you have to think on a day like that, when a company share price goes up, it's pretty exciting. And it's not just chance. You look at DNN, okay, that's a green day as well. UUUU, not so much. It's a tiny little green day, but it was already up many, many days in a row. So I think UEC offers the greatest risk to reward, because you can sort of risk off these levels, even though, yeah, it certainly had some red days. It's a little choppy, but DNN, you can do that as well. But I don't know. It's kind of a toss up. This is about 50% up. This UEC is, maybe, well, actually a lot more than that, but something about the way this is holding up in this day appears more interesting to me, but really upon second glance, I mean, this one looks pretty interesting as well. So it's hard to say exactly, pick your poison, but I do think UEC having that positive green day looks pretty awesome, even though it was sold off. It's reminiscent of Navitas and VTS, which I mentioned earlier in the video. Ton of volume ramping up, and yes, like everything that looked like it was going to break out got sold off on Friday, but at the same time, when a candle closes green like that, it's pretty bullish. So that's super granular. Let's zoom way out. What the heck are we talking about here? There's a lot of increased uranium reserves. This is the leading, I don't know what ISR is, but it seems like the leading uranium company in the US, or certainly in the conversation of those top three we're talking about that are public. Now, how do they actually compare? Well, there's the market cap for UEC. If we look at UUUU, it's a little less. If we look at DNN, it's less as well. So, certainly seems like the leader. I don't know what this new drug application is. That seems like that's totally hallucination. But this is the date from Reuters. Okay, in Wyoming, uranium by late this year. So could that be a big stock price appreciation event? Is the stock going to go up into that event, and then could be a sell the news? Could be. But I'm not trying to bet on that. Just really looking at the chart. UUUU. This is really no big deal. 2,500 shares at $20. I mean, that's what, a couple $100,000. So actually, it's way less than that. It's less than 50,000. It's not a big deal at all. Public math is not my straw suit, but this company is a little bit smaller. Again, it's sort of a toss-up, but DNN, this is the smallest. So that would really be the only reason that this is sort of off the table compared to UEC. I know it sounds like I'm agonizing over comparing these, but it's pretty important to sort of separate them a little bit, because it is really similar to talking about, what's the difference between RGTI, what's the difference between QBTS, what's the difference between IONQ, what's the difference between QUBT. This has always been the laggard, and that's continued to be the case. And if you can kind of establish early on which one trades well, which in the case of the quantums, it's pretty much IONQ has been on a crazy run. I mean, 30 to 80. So compared to QUBT, I mean, it's kind of no contest which one is sort of cleaner to trade. You have breakout opportunities. You have breakout opportunities where it just grinds up. And I think also, if we look at a more zoomed out level on DNN versus UEC, pretty similar. But I do think after this earnings, holding up after this earnings is a good signal. Whereas DNN, I mean, this is a breakout, but it's pretty difficult, and it's just choppy and gappy, and sometimes you just have to go with what you visually see, which is going to be hard for a fundamental investor to believe, but it is what it is. So another big point as well is that DNN is focused on Canada, which is great, but there could be less regulation in Alberta, for example, depending on where they're looking, but maybe not quite as investable at this particular moment in time when there's so much focus, particularly over the weekend, on U.S. energy independence. And yeah, it's really not about energy independence. It's more about rare earths independence. But there's definitely a link between rare earth and uranium independence in the U.S. And when we talk about UUUU, Energy Fuels Inc., I don't think this is really in the same conversation just because it's been ramping up. So just a broader point, when you see a stock go from, 5 to 20, but more recently it had 8 green days in a row, maybe 9, depending on how you count it down here. It's just crazy to think about buying that. I mean, eventually you're going to have a pullback like IREN, this AI infrastructure play that was a crypto miner, and even more concerning, you could have a pullback like App. Now, this particular move was sort of expedited based on some class action sort of data handling concerns. So that's what led to this down day, but it has rolled over since then, and it was already rolling over before then. So just as to say, like, yeah, if you get a handful of dozen days in a row, you could base and go up higher, but you could also start to roll over. So this UUUU is totally off the map, and I think at a DNN and UEC looks better as of now, and in general the way it trades in terms of creating this sort of pattern with actually some range to 7%. DNN is a little less, and then also the market cap for UEC is a little higher. So you're getting the best of both worlds. You're getting a more secure, higher market cap combined with more daily range, which is a sort of swing trader's dream. So rare earths and uranium, critical minerals, essential to nuclear. It's just sort of all tied together in the sentiment. It's maybe not directly tied together, but I mean, these projects that these companies, this uranium company gets control over a project that is a heavy mineral sands project that can produce rare earth materials to be processed at the company's mill. So, you know, this isn't directly about uranium, but it's all in the metals and mining categories, so they're linked. Now, we could pretend to be geologists here, but I think that's sufficient, definitely considering most people who are trading this are not even knowing barely what these companies do at all. They're just seeing this pattern and saying, okay, buy the thing, chart looks good, volume's there. Now, if you like these sort of explanations, if you think they're useful, hit that like button. If you haven't subscribed yet, hit that subscribe button if you want more ideas. And if you want to talk about the best chart on a given day, head over to stockscommunity.com. You can try it out for 7 days for $25, and I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.